Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. A lot of news this morning. I guess we're up on the news that we're staying in NATO, but we've got some M&A with Broadcom. We've got a couple of very interesting ratings changes today that I know we want to discuss. Netflix and a big price target increase, a big initiation in price target increase from Cantor Fitzgerald on a smaller company. We'll talk about that. We also want to discuss a weird move yesterday, maybe in Papa John's, PZZA, if we get to it. And, of course, we'll take your questions from our chat. Our guest today is at 8:15. We will be joined by Marc Chaikin, the creator of the Chaikin Oscillator, the founder of Chaikin Analytics. And he will break down his thoughts on anything because he's a pretty broad knowledge-based guest. He can take our questions from the chat. He can talk about any sector. So he'll join the show at 8:15. Joel, what is happening this morning in the S&P futures?
It looks like Dennis was off just by a day on the rally. We are trading up 15 and a quarter handles at 27.89. That's 15 handles on the nose. Pre-market low right near your close of 74 even. That low is 73.75. Target on the upside. Tuesday's high at 97.75. Crude up 53 cents after getting walloped yesterday. Full disclosure, I still got a few USL puts in my pocket, hoping for a retest of 70. Gold up 20 cents at 1244.60. Silver in the green as well, up 7 cents at 15.89. And Bitcoin trying to stay above 6,000 again. We are down $200 in Bitcoin. It's $6,145. Well, Triple D, you were calling for a rally yesterday. What I noticed is they didn't let the market go down. And to me, that was a really bullish sign. They never even sniffed that pre-market low yesterday of 65.75.
Yeah, I was a day off. I thought we actually might go green yesterday on the big sell-off. But the other thing I said, and then I kind of took myself out of it, I was saying I don't think it was going to be a 500 Dow point down day. So I said I think if you were selling yesterday, and this was in the pre-market near the lows, that I think you're on the wrong side of the trade. Today, it's proven that you were on the wrong side of the trade. So if you were selling yesterday, you're wrong. Stocks are right back up. There's just buyers underneath demand here now. The tune has changed here. The sentiment has turned. I think the market is going all-time highs. There's going to be headlines that knock us back. But every time we get a dip now, I think it's a buying opportunity here, unless something drastically changes and, we really start to get, crazy with stuff that's going to happen between China and the U.S. on the trade war front. I just don't see the catalyst take us down. I mean, maybe earnings are going to be a disaster, but they were pretty good last quarter too, even though they were selling them off on it. I think earnings could actually be a driver this quarter. So I've got a different feel here now. I think we're going to be testing all-time highs here, even by the end of the month.
Okay, I can't disagree with you. Yesterday was a very, very impressive day that, that it didn't go down. The buyers were just there. The buyers were there, and they didn't let the market go down.
No.
And
they're here this morning.
Yep.
I mean, they're looking now, for excuses to buy, and and that's just what the market is. There's a lot of people nervous about the trade war. The market is not nervous about it anymore. It was nervous about it, but as we said on the show the last few days, we've been saying that the market seems to be, we get a little bit downdrift, but then we come right back. So we've bounced back the last couple of times. We've had headlines, breaking that tariffs are increasing. So market has accepted that fact now and is moving on. And that's why I think those pullbacks, when you get another tariff headline, is a buying opportunity. And yesterday it was.
Did you get a chance to pick up any Bank America yesterday? I didn't have a lot of screen time.
I traded it a lot. I traded it multiple times. And you know what? I do want to be long this. And now we're getting to the point where you're getting close to the days that they're going to report. We're going to get
tomorrow.
Well, Bank America is Monday or Tuesday, Spencer. It's coming next
right.
week. But we have Wells, Citi, I think JP Morgan and PNC Financial. So we're going to get
right.
4 big banks.
Bank
I think
America,
Bank America's next week.
Bank America's Monday, and that's before the bell.
That was the opportunity, I think, yesterday to get in them. They're bouncing already here this morning on pullbacks. I like them here going into the reports. And you know what? I think they're going to report some good numbers. I think they could bounce this time and actually hold it. So I don't know if I'm not going to hold any of the banks through the reports, but would love to get in someone on the cheap here. Just that, if we can pull back here. But I think we're going to be strong today ahead of it. The play was probably to buy them yesterday, and you're already up in the trade if you did that. So the banks, I like them ahead of the reports. We'll see. I'm kind of feeling like they're going to report good numbers again, and the market might actually not sell them off on those good numbers this time. So the banks have been beat up quite a bit since the last time. So not saying we'll bullish the banks, but I'm not bearish anymore.
Not bearish.
So officially off
neutral.
I'm officially off the bear train.
Okay.
And I've been off the bear train for a few days, and that's that's where I'm at. I think I'm off the bear train on the banks, at least for now.
Stargazer wants to know if we think the companies will guide lower because of the trade war. And my answer is, what is the war? Is it on? Is it off? Are we doing this?
And which companies does it affect? It doesn't affect.
Yeah.
Is it affecting the banks? Is that going to affect the lending? I'm not immediately. I don't think it affects the bank's results at all. So, could it affect stocks like Harley Davidson, or could it affect stocks like Caterpillar, Boeing? Potentially. But I think it's a little bit, it's not going to affect them in the last quarter. Maybe going forward, do they warn about that? I don't know. Companies, aren't even that, forward looking to maybe warn about that. So we know Hog is potentially already, said some things there and been punished as a result of it. But I'm not that concerned. If the market's not concerned about it, I'm not concerned about it. And right now, I'm not concerned about it.
All right. Big merger today. Spencer, you want to give us the details on Broadcom and Computer Associates?
Yeah. Broadcom taking out CA this morning for $44.50 a share. And while we're on this, you got to love the trio of analysts who upgraded CA this morning after the news of that headline broke. But anyway, AVGO.
And let me guess their price targets.
44.
44. Joel. 44.50.
44.50.
Why would they put a 44 on a 44.50 stock? So if they put if anybody put a 44 price target on it, well, then they obviously need to be fired because the price is 44.50. Read the reports.
So this is
44 and a half.
Yep, and this is a cash deal.
Is every single price target 44 and a half?
I didn't actually look at the price target.
Fuck. Benzinga Pro. We're gonna use that thing. Show us. I bet they're all 44 and a half.
Yeah, they're yes, they are.
Okay, let's move on from CA. So that's obviously 44 and a half. Cash. It's $44. They're putting a 50-cent risk that the deal potentially doesn't go through, which the way, deals have been going, I almost wonder if there shouldn't be a little bit more of a risk premium put on that. But that's what the market's pricing in. So they're pricing in like it's a done deal. Let's go look over here at AVGO, which is getting assassinated here this morning.
Oh.
The stock is down 22 points. You cannot acquire something right now. The last few times we saw acquiring stocks, they're getting absolutely punished. This is annihilation that's one of the biggest down moves I've seen on a stock doing an acquisition there. I mean, you knew Broadcom was sniffing around. They were talking, there's rumors there. They tried to buy Qualcomm. They couldn't do it. They had a bunch of cash. They did a buyback on their own stock, which was absolutely useless. Now they're, come and they buy CA and they pay a premium. The market doesn't like it. It's down 22 points. I mean, I know a couple of people in the chat, Iceman was talking about writing puts on it. Probably not a bad idea. I mean, I don't know if Nick Shaheen is out there writing puts on it or not, but you got the 3% dividend. Maybe if you're writing long-term puts, maybe this thing does bounce back. You gave a good argument in the pre-market, Spencer. You looked at Walmart when they bought the shopping cart company. What was that?
Flipkart shopping cart company.
Flipkart. When they bought Flipkart, when was it, Spence?
That was May 9th. So that was right around here.
So they hit Walmart from 85 down to 82, and that was the bottom. So maybe, you let the dust settle for a couple of days because it gave you multiple shots. I never like to say, oh, this is the bottom, or this is the bottom, or this is the bottom. Maybe, wait till the dust settles. But, whatever, the fallout is from that, you can start making a double or triple bottom like Walmart did. Maybe that's where you take your shot. Maybe that's where you write your puts. But in any regard here, I think it's kind of silly that they're selling off 21 points because I don't even think it's that huge of a premium they're paying. It's not like they paid a double. The stock was $37. They're paying 44.5. They didn't get that bad of a deal. I mean, in the case of Qualcomm, they were trying to pay like 80 and the stock was like 50. So I don't know. I don't think it's that much of a premium they're paying that they should have hit it that hard. But this market does not like it when you acquire something right now. And that's why you got to be cautious, honestly, with Disney, because eventually Disney is going to probably be buying Fox, and it's been running up here. And probably on the acquisition news, they actually hit it. And then also another reason why I sold my Kraft Heinz, because they're rumored to be buying Campbell's. If Kraft Heinz comes out and buys Campbell's soup, Kraft Heinz is probably falling $4 on it. So don't think Kraft Heinz is going up on that merger. Not the way this market is pricing M&A action. I don't know if that's going to happen. We haven't seen anything since then. But thoughts here, Joel, on AVGO?
Oh boy, I tell you, I mean, you got a bidder here at the 220, 221 area. I mean, we're there. We're not cascading like we did earlier. So someone is definitely sniffing around there. If you go out to the monthlies, you had a monthly low. I think this is going back in 2017. You had a low of 221.98, and then I saw another low just under. So 220 psych. We'll see if you can hold up the barrage of sellers off the open. If not, I would use, like 215, 210, the different whole numbers. But folks, you just got to understand too, and Dennis, you made this point on the pre-market chart. And Spencer, bring up a weekly or a monthly. There's a lot of people still sitting on profits on this thing. So you're thinking, yeah. So if you're thinking, 221 is cheap to buy, someone that picked this thing up at 60, $50 in January of 2014, they're like, the hell with it. Just sell it over 200. Just get me out. So you got to take a two-edge perspective on things. Yep.
I mean, this stock is let's go look back at 2013 to put it in perspective. And not saying it's never going back to these prices. I mean, the valuations come back unless there's an epic fail at something with the company. It's never going back there. But it's a great point you're making. Since 2013, so we're going back just over 5 years ago, stock was $31. It's 221. So you're talking about stocks that got 800% in the last 5 years. There's a lot of people sitting on a lot of profits. Those people, like you said, might just say the exact same. I completely agree with what you just said. Give me the hell out, whatever it takes. I don't like my stock being down $22. I bought this thing at $50 or $60, 3-4 years ago. I want to book the gain before it goes away. So just caution to the person who thinks it has to stop at 221. It doesn't have to do anything. I mean, this could go to 200.
What if it breaks 200 down?
Yeah, it could. And I don't think there's any reason to come in here and buy it immediately. I don't think it's bouncing right back. These things started trading 477,000 shares this morning. It's not like it's trading down here on light volume. It's trading down here on heavy volume. So I do, and we know in this market, the weak get weaker and the strong get stronger. There's now all of a sudden a weak stock. So I think, if you're writing puts out 6 months, you'd probably be fine. But I think you're going to get a better price potentially yet. So why not wait till it actually stops going down? And this is something I've learned over my 19-year trading career, and I've learned it the hard way, is never try to call the bottom. It's so hard to do. Wait till it stops going down first, and maybe tries to start ticking up, and that's when you strike. If you're just calling the bottom, you get run over so many times because it's amazing how how these things overshoot sometimes. It literally could be at $200. Like, I'm not saying it's going to. I'm saying it's possible. So why pull the trigger and be the first guy and say this is the bottom and has to stop here? It doesn't have to do anything. Those people last night buying 230 hand over fist thinking 230 was the bottom. Well, they're 10 points underwater here right now. Why can't this go to 210 today, Joel? Why not? That's what I'm saying. It doesn't make sense, but the market doesn't make sense a lot of times.
What happens if it takes out 200? Look at the air between 150 and 200. I mean, like you said, selling puts or put spreads, put spreads would be better because then eventually if it calms down, then you take in the premium. But, a lot of momentum going to the downside on that. Dennis,
You're fighting the tape on this one. And yeah, sometimes you're going to get it. It's going to bounce. Some people, there's always going to be somebody that buys the bottom. But there's always going to be a lot more people that try to buy the bottom and didn't get it. So all I'm saying is these things usually just don't bounce right back and will be at 240 tomorrow. Usually they stay in the gutter for a while. So they're going to give you that shot. They're going to give you that second chance. So why be the first guy? And, if it does bounce back, okay, well, you missed the trade. But I'll tell you, more often than not, you'll save yourself a lot of money not being the first guy trying to call the bottom.
Okay.
All
All right.
we're
That's our rant there.
We're gonna take a quick break and grab Marc Chaikin. He is the founder of Chaikin Analytics. He is the creator of several well-known technical indicators. He's gonna give us his picks and pans for the morning. We'll be right back in a moment with Marc. And welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by Marc Chaikin of Chaikin Analytics. Marc, how's it going this morning?
It's going well. The Eagles are back on the practice field, so everybody's feeling pretty good here in Philadelphia.
Yeah, I don't know if Detroit even has a football team. So let's skip over that. Let's go to some of the stocks that, actually, let's start with this. We were talking earlier in the show about financials. Obviously, we're going to get the earnings tomorrow and a little bit early next week. Dennis is off of the bear train. He's not on the bull train, but he's off of the bear train when it comes to financials. Where are you at right now in this sector?
I think Dennis is on the right track. We've been bullish on the stocks. Obviously, they've taken a big hit. I think the earnings are going to come in very, very well. It's the guidance, and it's really going to be a function of the economy. The financials are a mystery to some people. You can blame it on the flat yield curve and maybe expectations that the 10-year would be 3.5% to 4% by the end of the year. But at the bottom line, the insurance companies, the banks should do really well here in this rising interest rate environment. Net interest margins are moving up. I think that they're probably going to work higher, and I like getting off the bear train. We've stayed with our bullish positions, and I think you should add to them in here. You have the luxury of waiting a day to see what they do and say tomorrow.
Are there any specific numbers you're going to be watching closely? We saw, I want to say 1 or 2 quarters ago, several banks, saw decreased revenue from trading. Are you going to be watching trading revenue? Or are you going to be watching lending revenue, amount of loans? Or is there anything specific with regards to the banks that you're going to be watching besides from the EPS and the revenue?
When you're talking trading, you're obviously talking Goldman Sachs and Morgan Stanley in the main. With the bigger banks, except maybe at JP and Citi, you are going to be looking at the lending patterns. There's obviously a demand for money, and net interest margins are strong. So I think you also want to look at loan reserves and see if the consumer is still strong, and every indication is they are, and that consumer debt is not weighing on their purchasing decisions. So Morgan Stanley and Goldman are a totally different case. I don't know. The market is really soured on these stocks, and as well as the big banks. So I think what happened is they got overowned in January leading up to the top. A lot of people stayed with them because they're value plays. So you've had really 6 months of a correction now. Although they did, in many cases, make a double top back in early March. So call it 4 months of a correction. I think they're going to turn around. And by the way, if they turn around, it's going to lead the S&P through 2,800. That's what's been holding back the S&P, where the NASDAQ and the Russell 2000 have made new all-time highs recently. S&P still 4% away, 5% away. It's the financials that are going to make that happen.
Speaking of the S&Ps, we've saw a nice bounce back from where we were probably just a week and a half ago, where they kind of were just meandering between 269 and 273, looking at the SPY. We've rallied the last 4 or 5 days. We came and we sold off on a headline on the increased tariffs there, and the market shrugged it off and is bouncing right back. I think that's a good sign. I've made the bull case here that I think we could be challenging all-time highs here, potentially even by the end of the month. What's Marc Chaikin say, and what's the Chaikin Analytics showing on the S&P?
Spot on there. Chaikin money flow very strong. It was strong when you made your oversold down at the 2,700 level last week. And I think what you're going to see is large caps attracting a bid here. Small caps got really overextended. Typically, when that happens, large caps do well going forward. So I'm in your camp here. I think the market is going to carry the S&P, and it'll be the financials, as I said. So bullish on the S&P. And I do like the fact that there's breadth in the S&P. It's not just the FANG stocks now. And even though the headlines talk about the FANG stocks, there's a good, breadth percentage of stocks above their 50-day average, very strong. So I think the S&P is positioned to make that new high, perhaps by the end of the month. But let's be careful. Many years, the market makes its peak in late July, early August, goes back into the summer doldrums, and then you get a fall charge, especially in midterm election years.
We're on the line with Marc Chaikin of Chaikin Analytics. Marc, we had a question in the chat earlier about the effect of tariffs and, what companies may be, affected by it and, perhaps coming out with good earnings. We know how important guidance is. My simple answer is like, who the heck knows what the tariffs are, what they're going to be, if there's going to be any at all. So, how do you factor something like that into the Chaikin money flow?
Well, the money flow tells you what the big money is thinking and doing. So that's an edge. So if you looked at, some of the weaker names like Deere and Caterpillar and even Boeing, you'd see the negative Chaikin money flow there. I think what you have to do is go a little bit away from small caps, which has been the safe haven bet because they're less affected by a tariff war. Although, as you say, nobody knows. There's a spillover effect. The global supply chain is so different now than the market was 10 years ago. But I think there's a clear-cut group of stocks that are relatively immune. So a lot of the sort of entertainment stocks, Comcast, even Disney, Discovery, all look good. Healthcare, Humana, Centene, UNH. So I think you have to go away from guessing the bottom on the stocks that are affected and look at the stocks that aren't affected. Software, look at the big takeover bid for CA. So, things like Akamai are very strong in Chaikin Power Gauge and Chaikin money flow. So is Facebook and Google. Visa and MasterCard, Comcast, and Humana, Centene, United Health. These are the names you want to buy, but only on weakness. Please, 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 if you're listening, do not chase. Do not have to chase in a choppy market. As you said, we've been bouncing between 2690 and now we've really broken through the top of that 2740 range, but you do not have to chase in this market.
I mean, I will go as far to say as you don't have to chase in any market. I know some markets go crazy, but there's always something to find, and there seems to always be a pullback around the corner. I've never made a lot of money chasing stocks, and I've always equated to try to jump on a moving train, and sometimes they fall into the tracks. I usually like to wait until either the train stops at a station and then I can get back on it, or obviously and then jump on. But when you try to jump on that moving train, a lot of times you get hurt. I remember this one trader used to trade beside us at Bright was always chasing everything. Stocks start moving, and he'd always be buying the top, and then it starts to go down, he'd always be selling the bottom. And I'm like, holy cow! I learned that like in the first couple of weeks of trading. I was just watching him trade, and I was very new. I was raw. I was like a 22-year-old kid working at a prop shop, trying to learn from everything. And I was like, man, this guy's just always at he's buying the top and selling the bottom. Like, you can't do this. So I learned, from somebody else's mistakes, which is always good. And, everybody gets, involved. And yeah, sure, sometimes you can play the momentum, but I still like to buy the pullback. When you got a stock in a strong uptrend, like you were just saying, Mark, wait for the pullback in that uptrend and buy it. Or if you got a stock in a downtrend, wait for that, rally, little, short squeeze to put on your shorts. So that's kind of how I play it. So completely agree with you.
Yeah, and we actually put a name on it. When stock breaks out on a relative strength basis, we call that a bullish personality change. Usually you get that coming out of a base. And I always say just what you said, don't buy the breakout, buy the first buy signal. In other words, you get a pullback, an 8-day low. If the power gauge is bullish, you'll usually get an oversold buy signal. That's your entry point. We call it a low risk entry point, and for all the reasons you just articulated.
All right, Mark, can you give us a couple of names you are not feeling so hot on right now? Some bearish names.
Consumer staples, you've got Colgate, you've got Estee Lauder that triggered a sell signal in our work last night. And I still don't like the machinery stocks, Deere, ITW, International Tool Works. These names were weak before the tariffs. Rockwell, ROK, looking very weak. So it's some of these defensive stocks that have actually caught a bid here in the last week. This makes no sense to me, by the way. The defensive stocks, utilities, staples, real estate I get because the yields are so high and they're not going out of business. But why in the world, in the midst of what's going to be one of the great earnings seasons of this bull market, would you want to go into the defensive stocks? If you're doing that, you're making a bearish bet. You're basically saying this market's going to drop 10%. Now, I don't see that from a July peak at 2,900 on the S&P maybe. We get a 6 to 10% drop. So I'd say use this rally in consumer staples, in utilities, in the defensive sector, and the machinery stocks to take some money off the table and redeploy it in the stocks we like.
One more here. What about this Broadcom? We were talking about it this morning, obviously, with the M&A. It seems like you just can't buy a company. If you're the acquirer, you're going to get crushed. Are you buying, dips like this, or what is your thought on a stock like AVGO this morning?
Down 24 points because they bought CA.
This has been a trading range stock for all of 2017-18 with the low at around just above 220 and the peak up around 270, 280. So it's had a bullish rating at times when it's not been in a downtrend. It just feels to me like a stock whose time has come and gone. When you go back on a 5-year chart, which I'm going to do right now, you see that this stock was $40 back in 2014.
Great minds think alike.
Did you?
Great minds think alike. We did the exact same thing. It's funny. It's funny how traders, trading minds think alike.
It's funny how the great minds of Wall Street think alike.
Joel,
I know. Yeah, Peter Lynch said that when I first met him, but he wasn't talking about me. No, so 40 to 280, that's a heck of a run. This is an NVIDIA with some proprietary chips that, could find new life in new applications. This is your basic commodity semiconductor trying to find a way to expand their business. I would have actually been more happy about the stock if they had allowed them to buy Qualcomm.
Mark, one more.
Does
the power gauge cover futures as well?
No, but what are you thinking about? Because sometimes you get the one.
Yeah, no, I'm just wondering about crude here. I mean, that was a really unusual day yesterday. They hit it real good. Got down to 70, which is a great psych level, and now you're bouncing. I'm just trying to gauge whether or not was just going to turn around and go right back up to 72, 73 on me, or we get a test of that low from yesterday.
That's a tough call because there were so many political influences out of Libya, Saudi Arabia, and so forth. In general, I don't see crude going down very much. I think it's a question of, if you transfer that over to the stocks, about when you buy stocks like Phillips, PSX, and Marathon, which we've liked. I mean, clearly they're in downtrends here. You bring up oil and financial stocks, and what you're really looking at is very bullish for the market. You've had group rotation in the large cap sector, and this is just one of the examples. I'd actually be a buyer of Phillips PSX in here because it's had a mild decline relative to the others, and if crude oil stabilizes around $70, it's actually pretty good for the refiners. So PSX is on my buy list. And I think this is a stock you buy here. Whether you trade crude futures, they're a little too volatile for my taste anyway. I like the equities, but Valero, PSX, that's where I would go based on the fact that I don't think crude is going to break down.
All right, Marc Chaikin has been on the line with us. He is the founder of Chaikin Analytics. Mark, thank you so much for the time. As always, talk to you in a couple of weeks.
Look forward to it. Spencer, Joel,
right.
Dennis, be good.
Thanks, Mark.
All righty.
S&P futures hanging out near the highs of the session. Our high is 27.91. We're just holding above Wednesday's high here. Not a lot of movement in the futures here in the first 30 minutes of the show. Speaking of 30 minutes, 8:30 in balances. Dennis, anything notable? How about the buying balances?
You know what? It's quiet here again. I think institutions are just very gun shy here to show their hands too early. Okay. So you often see it. Some days you'll just see that they're coming here buying. They don't care. At this point in time, I just don't see a lot. I see Alibaba with 50,000 shares to buy. It's having a nice bounce here this morning. I also see AT&T 59,000 to buy, 30,000 to buy in Morgan Stanley, 90,000 to sell in Pfizer. That's going the opposite way there. Pfizer, again, I'm going to say there's a huge seller up there at 37.50. Atella takes that out. I think the bears actually have a case here on PFE. So I still have it in my long-term investment portfolio. I'm sticking with it. I've been in there for years. I'm in from like $14. But, I mean, 37.50 just looks like a pause area here. Such a huge seller up there. Let me just go get the book and see what the seller is still. We talked about it. We talked about it a few days ago, but it's enormous seller. And the last couple of days, it's just hitting it right on the kisser. It's not coincidence. It's still 100. So they nibbled at it a little bit, chewed at it a little bit yesterday. Still 150,000 shares to go. Gets above 37.50, then you go to the next level of 38, which is 240,000. It's like whenever, these stocks, that older, Dow stocks making new highs. It seems like there's, always sellers at the points or on some of these at 50-cent points. So 37.50 your first level resistance and $38. At least that's from an order flow perspective.
Dennis, I'm not sure who it was, but they want your thought. You still own your MasterCard, right? MA here. On the move, on a breakout here. You did have a double
new
top.
All-time highs.
Yeah, new all-time highs. 204 was a former all-time high. That will now be support. I mean, what can you say about this stock? I mean, no resistance in sight.
It's been unbelievable. And I mean, they continue to make money, continue to expand. I got to thank my, trading partner from Bray Trading, Chris Banier, was the one with this one. That was back in 2000, I think 8 or 2009 after the financial crisis. He's like, you got to buy this MasterCard and you got to buy this Visa, throw them in there and forget about them. And I did. I didn't buy the Visa. I bought the MasterCard, but I bought it at I think I bought the Visa too, but I've sold the Visa since. But the MasterCard, I'm averaged in from, I think my average cost base is $16. So I owe $205. I mean, that's
crazy.
That's just long-term investing. What's that?
You call me Warren Buffett and you own MasterCard at 16?
I'm in from 16 on that. It's a nice look. I look at it in the portfolio and you smile. I'm up like 1,600% or something like that, it says. So, I mean, these are, or I don't know what it is, 1,200 or 1,300%, whatever the math is. But, I mean, this just goes to show if you can find good companies, that have okay valuations and they can grow, I mean, this is what can happen. So it's an argument for long-term investing and buy and hold investing. I do both. As an investor, I buy and hold until I don't like the story anymore. Somebody asked me about MasterCard a few weeks ago, and I was like, the story is still good. I mean, everybody's going plastic. I don't see anybody getting rid of their MasterCard anytime soon. I don't think Bitcoin is coming in and, replacing, everything here like everybody else, or like some people think. So I'm sticking with MasterCard and Visa. I mean, the story is still there. Is valuation extended at times? Yeah, but I mean, they continue to grow. And I just think it's a cashless society. We're going to cashless. And, maybe it's going to be, something that we don't think about. But right now, MasterCard and Visa are benefiting from that move.
Okay. All right.
Go to these crazy.
Yeah.
Let's go to these crazy ratings. So we've got 2 of them this morning. GLMD. Let's go to the first one here. Right. GLMD Pharmaceuticals. I'm looking, at my, at my news and looking at this, rating change last night. Cantor puts a price target of $59 on this $10 stock, and I was like, I look at it, I'm like, is that a typo? I'm like, and then it starts going 11, and then it starts going 11.50, and then it starts going 12. It's 12.85 here now, so it's up 22%. What you've got the note here, Spencer. What does Cantor see? $10.55 the stock close at. $59 price target. What do they see?
So
what the market didn't see yesterday.
So initiating at overweight, and you mentioned the price target, 12-month price target, $59. So I'm looking at the note right now. In their view, so what GLMD has is a drug for liver disease, and in Cantor's view, there's only 3 companies by Q4 of next year. There will only be 3 companies with drugs in this specific space, in this specific area of liver disease. GLMD, Allergan, and Madrigal. And if you look at the market caps, and I'm reading from the note now, if you look at the market caps of Madrigal and Allergan, and if you look at the market cap of GLMD, it is the clear outlier in the space, right? It is way smaller, and they believe that not only is their market cap smaller, but their drug has the best chance of approval of the 3 that they see as the only real drugs in this specific area of liver disease. So they like their drug, at least for the next year or so. It has the best shot of succeeding, and based on the fact that it's just so much smaller than their peers in the space, I guess they're saying it has a lot of room to run.
What happened on June the 12th?
Dennis, I was just looking at that.
Go look at the pro, Spencer. We're into the bus here. Nice thing with the pro is it keeps it all in there, so you just go to the ticker and you can go back and you can find it. What happened? The stock goes from like $8 to $27 that day. Was that a positive trial or something? What was the deal?
The drug Aramcol achieved regulatory approval, and this is again they're all up in the liver disease space. So yeah, they got regulatory approval for a drug. I think that's a different drug than the one referenced in the note this morning. But yeah, regulatory approval for a drug, that'll do it every time.
That's just, and then it gave it all back with a month and a half. So here's an argument for not chasing. You had your shot. I mean, now it's 13. It's still significantly off those highs. Do you get a pullback here? I don't know. I'm not following the story closely, but Cantor, it's not like they're fairly widely followed analysts there. What's the big say? It's not like they're just trying to get on the board. Some of these smaller shops, you wonder sometimes when they throw a crazy price target on if they're just trying to make a name for themselves in these smaller analysts. But Cantor is widely followed. So when they put something on there, you got to take note. And the market is today, and the stock is trade up over 20% on that.
This is funny. This is funny. They're almost following the blueprint to a T. So they had that news that was on June 12th, right? June 20th, or June 18th, they announced an offering. And June 20th, it was announced $15 a share. 5 million shares priced at $15. So just following the playbook of good news, raise money. Good news, raise money. Good news, raise money.
Dennis, were you able to lift anything there? Did you try and get it?
I could have bought 11.28. I couldn't bring myself to pay up 80 cents for it, though. I was like, there's no market. I saw the rating change. And I was like, there's no market here. And I'm like, I think I bid like $11. I was like, I'll go for 11. But 11.28 seems kind of steep to pay. Hindsight's 2020. I should have lifted it all day long. It was only like 500 shares. It wasn't like I was going to get rich on or anything. But they went the 11.28, then went 11.50, then went 12, then went 12.50. I kind of threw up on my shirt a little bit there because I could have bought the 11.28, maybe quick $500. But I mean, sometimes paying up that much for a stock on a rating on an opinion. It's tough to do sometimes. You don't know these things are going to go up 20%. I mean, hindsight's always 20/20, but I figured maybe 10%. And you're paying up 11.28. You're paying up most of the moves. So unbelievable move.
14.92 is your pre-market high. You've backed off there $2, so you need to regain some momentum to get back up. I could have the pre-market high could be standing here as the high of the session. Now that we're under $14, I'll be paying attention to 1360 area. Let's call it 1370. You had a trio of highs right at 1360 in late June. So discount the pre-market high. I'm calling 1360 resistance here in GLMD.
Let's go. I'm not calling it resistance, something like that. So I'll just stay out the resistance chain. I'm a buyer of pullbacks now on GLMD. But let's move over to Netflix. It is getting downgraded here this morning at UBS. You've got the note here. Stock is shrugging it off. I mean, you just talk about stocks that are just strong. I mean, here's a stock. I read the note, and Spencer, do you have it in front of you? The UBS note, because I can give you some highlights as well.
Not in front of me, no.
Okay, so I briefed the note, and I'm just going from my memory here. I don't have it in front of me right now, but it was basically saying that, hey, all the good news is baked into the price. They went from buy to neutral. This was from UBS, and they also said, with a market cap higher than Disney and Comcast, that they thought the valuation was fully priced, so they didn't see much upside from this point in time. Pretty bearish note. Netflix actually goes down $5 on that note when it got released last night. Honey Badger stock that it is, the buy the dipper is right back in here. The stock is barely down, or it's only down 75 cents. Unbelievable how strong this stock just shrugs off anything. So here's a stock with, pretty, UBS is pretty widely followed. Gets hit last night on this. They buy it right back. I mean, they just want to own this. It does report, I believe, next week, does it not?
That's correct. That's correct.
Do we know what day?
It reports on Monday after the bell.
Oh, this report's soon. You know what? This is one that could just, it's gonna. I think this could go green, make new highs here today. It's just showing me on the tape. If you're coming here and downgrading the stock, or you're coming here and selling because it got downgraded today, I think you're on the wrong side of the trade. I think they don't care. I think they want to own it ahead of the report. I think the Netflix subscriber numbers are going to blow it away. I think the stock is going to pop. This is my opinion. But the reason I said this before, the reason I think this is because they really, cut down on people ripping off other accounts. So, you can only have 2 people on an account right now, 2 logins on the same account. You used to have like 5, 6. Everybody's sharing Netflix accounts. That isn't happening now. So they're going to get those people to probably turn into subscribers. So I would not be surprised if these numbers actually are a lot better than people even are expecting. So I don't know. Valuation makes 0 sense for me too. Long term is not going to my invest portfolio. I almost want to buy it ahead of the report. I almost want to buy it into the report because I think the numbers are going to blow it away, and I think the stock could pop $50 on it. Okay. So what is the straddle? You have let's go. What does straddle say? Can you look at the price from? I know they're closed right now, but can you look at the closing prices? Look at 420 straddle for next week.
Okay, I'm gonna have to pull up another platform to do that. So
Joel, go get the straddle. I bet you.
Okay, well, Joel can do that. I can give you some more numbers. So if we're talking about earnings in 2 days, we're looking for an EPS of 80 cents on the revenue of $3.94 billion. The big number of subscribers, Dennis, is what you're looking at. Yeah. So the guidance that they gave in April was 6.2 million new subscribers for the.
I think they're going to blow it away.
So you think they're getting at least 6.2 million new subscribers?
I think it's 7 million.
They added 7.41 million in Q1. So they're going
to blow it away.
As of the end of last quarter, or as of the end of Q1, they're at 125 million global subscribers, 7.41 million.
I never do that, but I might actually take a flyer in the earnings. I might do it. Don't follow. This is just an opinion here. This is my own thoughts. This is just thinking. And it's just simple thinking is what it is. But I'm just saying, they have cut back on people being able to log into multiple. When do they do that? Do we know when they actually cut? Because when they cut it back, they did it in the last few months, so that you can't have more than 2 logins on the same account. Does anybody know? Chat, do you know? If that was done more than 3 months ago, maybe that's not going to be priced into my whole thesis. Be thrown out the window. But I just think a lot of people who are ripping off other people's accounts, or having one person subscribe and 5 buddies on it, that doesn't happen anymore. So all those people gotta, if they want to keep their Netflix, potentially have to become subscribers. So it's kind of smart. I mean, the way they did it, they got you hooked. Now they're taking it away from you, and now start paying us.
Dennis, how far do you want to go out? I mean, do you want to look at next week's?
The strat you can price on it. Yeah, next week. So look at next week. Look 425. Put calls, add them out.
You might faint if I tell you what it is.
What is it? It's more than I think.
$40.
Oh man! So you can't play this through options.
You can't play the straddle. I don't know.
No, you can't. Because I was thinking it might go up 50 points. Could you imagine? You don't know it's going to go. Well, you can just buy. So what's the 425 call going for?
17 to 17 and a quarter.
Oh, so I hear you're 7 points. So it's got to go up to 442 for you to break even. This is why I just buy a stock. If I think it's going up, I'm just going to buy a stock. Maybe some people can't choke on the risk, but you're choking on a lot of risk already. You're paying 17 points for a 425 option. That's expiring next week.
That's 8 days. Yeah.
Man, This is the whole thing why you can't buy options. I mean, I like buying the pennies, the nickels. Now I'm going to have a rant. But I will say Nick Shaheen's got it, figured out. He's always writing options. Maybe the play is to write the puts on this. If I think it's going up, maybe I bring in more premium that way and just write some puts on it. There's a different way to play it if you didn't want to, flat out, buy the stock. But I don't know. You're sitting there and you're buying, people think, oh, yeah, it's going to go. I mean, even if it goes up to 442, you're breaking even on that 425 call. If it goes 450, 460, sure, you made money, but how much risk did you take on? Because you know what? They could have missed the numbers and been down. Or they could have, not they hit the numbers, not rally. Sometimes they hit the numbers and don't rally. So it's so hard to make money buying options. That's my.
I don't think that you go green in this thing today. I don't know. You might go green. I just see there's someone that wants out at 420 ahead of
big level. Big level.
Yeah. There's forget the all-time high. You have three highs in a row in the same handle, just below a whole number. Someone's targeted 420. Someone's trying to wiggle out of some stock at 420. So I'll call that resistance. On the downside here, I mean, 1060 was yesterday's low, your 3-day low, 411.10. So I wouldn't get mildly nervous about more downside until you took out 410. So 410, 420, that's my numbers here in Netflix
This is
today.
This is interesting. This is the first downgrade I'm looking at in the Pro. This is the first downgrade for Netflix since March 7th. That was from Stifel. Same thing. Buy to hold. So maybe
would you not think what happened on March 7th?
Well, I was going to say maybe we can look at March 7th and
go look at it.
Let's
see.
see.
Bring it up.
I can get it.
It was March 7th. They downgraded it.
Well, was it at night? Because it went up.
Because then that would be March the 8th. Because I'm up on March 7th.
Yeah.
What's it say in the Pro? So
can't see what it did in the pre-market, but they downgraded it from buy to hold on March 7th.
What time is that in the Pro?
It was in the AM, 6:50.
On March 7th.
Yep.
They downgraded from buy to hold.
It
went
down.
Opened. Okay, so the previous day, I'm just looking at the previous day's action. It closed at 316. It closed at 325.
Yeah.
And the next day it opened at 321. So it opened down 4. Ended up closing. Oh, it ended up going all the way down to 314. So I had a little washout there, but it really didn't go down much. So shows you again, and we're selling off a little bit here on this Netflix. Right now 418 down to 416. But I don't know. They're shrugging off this downgrade. There's shorts that are still. What's the short interest on Netflix? Spencer, you have that in front of you?
I'm going to look right now.
We're analyzing this trade on the fly, so this is the types of analysis that I just quickly look at, and trying to get a feel. But short interest is always something you want to look at. How many people are going to be puking if they do beat the numbers?
That's what I got 4% is what I got.
Oh, it's nothing. Yeah. So it's pretty low. Everybody's already puked their Netflix shorts. They've puked out hundreds of points ago. You know what? I still think though. I think this could see 450 on the tape after hours.
Do you think
here's how I would play it. If I was actually,
go ahead, give us that.
Yeah, if I'm buying a call or if I'm buying the stock into this because I think it's going up, and I think that's my opinion. I think it's going to rally on the report. Then, I'm looking at probably selling the pop after hours, the initial headline number. So it goes up 30 points. If I'm long a call, I'm probably selling the stock against my call. That now opens me up to the downside. If it fades it, then, all of a sudden, I'm actually short the stock and I'm going to have to cover my call. So let's just say hypothetically, I'm not doing this. I don't like paying $17 for a call. Let's say hypothetically, I buy the 425 call for 17 points. If it goes to 450, at that point, just saying, if all this scenario analysis, and this is what you should do if you're in stocks, scenario analysis. So let's say it goes to 450. I could short the stock. Let's say 449. I think it's going to stop at 450. I short the stock. I now have locked in my gains. So 425, I've locked in a 24-point gain. So I can't lose on that trade. If for whatever reason it starts to sell off in reverse, and I mean like selling it right on the headline number, like having your order out there ready to get run over in the pop. Because sometimes you see these things pop and then give it back and drop. So what I would open me up for is now playing it on the downside and playing it for the potential. So if it keeps going up from there, trade's over and made 24 points. But if it goes into reverse mode from that point, what has happened with Netflix right now? Because it just keeps falling here now. Like all of a sudden, did everybody read the UBS note? It just fell 3 points as we started talking.
Because we were talking about it on the pre-market show, Dennis. Now
I'm talking bullish on it. I'm talking the wrong. It's going down.
You know what's going down right now, and I want to know who in the pre-market chat shorted Broadcom, because it is just getting absolutely
214. This is why you don't pick bottoms, guys. Live analysis. We were 221 when we were saying let the dust settle. Don't try to call the bottom. It's 214 now. We just saved you $7. You could send us a thank you card. But they'll send us hate mail on the ones we get wrong.
I was going to say we'll get some edits, bad stuff.
But Netflix. So anyway, something happened. But I was just saying, you could hypothetically, if you shorted the pop after earnings, then if it did go into reverse mode, you participate. Let's say it falls back below 425. You were short the stock. You don't have to exercise your call, and now you're just participating all the way down. So that's the way I like to play options to get the maximum out. I love selling the stock against my calls, selling the stock short against my calls, or buying the stock against my puts. Because then I'm
your hedge.
I'm hedging myself up, but I'm still participating going the other way, as opposed to just flat out selling the call, which you can't even do after hours. I mean, you can't even. The options market's closed, and so many people will look at it and boom, they'll buy a call. Stock will go way up and then turn around and go down and give it all back. And they're like, damn, I was looking like really good and now I'm not. Well, if you would have been selling stock against your calls, you could have locked that gain in. So that's the nicest thing about it, is you actually allows you to lock in your gains without the option market being open.
All right. That's great rant there, Dennis. We'll see what happens. I don't know if we'll see 200 today in that, but Dennis is getting into the Netflix here, possible trade scenario.
I possibly might play it, but I want to do some more research. I'm going to do it over today and find out when they actually made the move to stop people from logging in 5-6 times on the same account. If anybody knows that, let me know.
I think
that's ago. My thesis is dead.
I think that that number, that's still allowed. I think you're a little bit confused because you're allowed to use it on up to 6 devices. But you can only, as I understand it, on the highest package, you can only use it 2 places at the same time. But you can have it on as many as 6 different devices.
Yeah, it's only 2 places. When did they change? Because it used to be like, I know there was a ton of people that had one guy would have a Netflix account. There'd be like 6 people using his Netflix account.
I don't think that
now
was
it's
recently.
Only 2.
I don't think that was recent. I think.
Is that too long ago?
I mean,
it's fairly recent. You want to know why I know it? I was using somebody else's Netflix account. I had to subscribe.
I'm going to tell you guys something, and I don't want you to make fun of me, okay? But this happened, I don't know, like a year and a half or so ago. I had looked, and I was actually paying for 2 Netflix accounts.
Holy cow! That's the fun thing. It's only like $10. What is it? $10 a month?
$7 a month. I looked at I look at my statements. I'm like, what the hell is this? And then like Dana or Emily did it, and I'm like, I am the biggest idiot in the world. Everyone is poaching off one account, and then I'm like,
that's you.
That's one.
Did you cancel one?
Oh, of course I did. Oh, I could have, I tried to get my money back and stuff, but there.
How long did you subscribe to 2 accounts?
I think it was only like a month or something. And I looked back at his statements, and I was just like,
check your bank statements.
I do. I just, you a $7 chart, 714 or something, you don't pay a lot of attention, but then you see 714. And then you see 714, you're like, holy mackerel. But anyways, I thought we can't bring that up again here. Dennis, JJ Budd wants to just give a quick example or what attracted you to Bank America yesterday. And that's one of your go-to stocks. You like that stock? It goes well with the market. I
trade Bank America every day. Okay. Every single day. I'm day trading Bank America. It's thick, so I can get out within a penny. I actually use, and here's market structure stuff, but you can use stuff, like Coda Markets or, IEX and even get at the midpoint. So sometimes you're not even paying the spread. Bank America is so thick, there's almost always a midpoint fill. So it's 28.90 to 28.91. I often can go into my Coda Markets and get filled 28.90 and a half. So, I don't even pay a spread at all. So it's just nice to, be able to get in and out of something with size within a penny. And that's the thing is you can move 10,000 shares with the Bank America within a penny and get out. And what stock can you do that? So that's why I like it. It moves with everything else, got the liquidity, moves with the other banks. So I've got stuff relationship-based trading there, and I pair trade them all against each other to a certain extent too. So just basically, if one bank's up a little bit too much relative to the other one, Sometimes you sell short the one and buy the other. Now, it's not always clockwork. You got a lot of other factors to consider, like, the fact that JP Morgan City are going to report tomorrow. But that's why I like Bank of America. It's just a good stock to trade. As an investment here, it's not in my portfolio, but I said
210.
I like the banks. I like the banks ahead of the numbers.
210.50, Dennis. 210.50. Just printed in Broadcom.
Why don't we just short the stock? We should have shorted 220. It's 209. 200. You said 200, Joel.
I said 200.
Man, we're giving you money here, folks. I might be wrong on the Netflix, but everybody's called me out. They don't think 450, but and that's kind of a gamble call.
You got too analytical on that, Dennis. You're better. You see the news, you react, you flip, you buy, you sell. When you start thinking like that,
I can't think. Just got to react. I looked at that AVGO at 2 seconds, and I said it's probably everybody's getting chewed up on. It's going lower. That's pretty much it.
That's your
that's why stocks continue. When stocks start going down, they continue to go down because you have everybody calling the bottom. And they're like, oh. So everybody who was buying this at 230 last night is puking it out at 225 and 220. Everybody's buying at 220 is now puking it out at 215 and 210. So it's just a puke fest. Everybody's throwing up all over the place because it's like that movie. What was that movie? Remember
Stand By Me.
Stand By Me.
You guys in your movies.
Hey, what was the fat kid's name eating the pies? Remember?
I don't remember.
And he starts puking, and then everybody starts puking.
That was Matilda. That was Matilda.
That too.
That wasn't that movie.
That too.
It was Matilda.
Hey, one more. Can you remember
that?
That's Stand By Me. What was his name? Google that. What was that kid's name?
I think it was a word that we can't say. I don't know.
Anyway. Allowed to say puke because I just said a lot of times.
Was it lard ass? I'm not going to say it. Never mind.
It's a puke fest in Broadcom, folks. I'm not trying to call the bottom on this one. I've tried to call the bottoms too many times. 220, 230 was not it. 220 was not it. 210, 200. Who knows? Let the dust settle. Let everybody else puke, and and you come up and well, I don't know if we're going to come clean it up. That's not a good analogy, but let's wait till it stops going down before pulling the trigger. That's the point I'm trying to make.
Hunter 69 with the save. My wife and I both paid for Amazon Prime, so I don't feel as bad there on the double Netflix. Real quick, we only got a couple minutes
left. My mom had 3 serious accounts, and she didn't even know she had one. She thought she had 2, and she had 3. So people do this when they're too cheap. You just have all these accounts, and you don't even realize it. And then it's floating around in one of their cars, and they never even turned it on before. Like I've been playing extra serious for a year and a half here. I didn't even know I had it.
I'm guilty of this too. I didn't realize until last year that I was an Amazon Prime subscriber. So
we gotta start looking at
I'm also guilty of this. Can we do Delta earnings real fast before the end of the show? Since we
need to do Delta and Twitter.
Okay, all right.
Twitter.
All right, we'll do both fast. Delta Q2 EPS $1.77 that beat by 5 cents. $1.72 was the estimate. Sales 11.78 versus 11.61 billion. So beat on the top and the bottom for Q2. The Q3 EPS guidance is in line. The fiscal year EPS guidance is in line. They're raising their quarterly dividend. 5 cents a share from 30 to 35.
Stock gets the lift or gets the dip, then the lift, and it's lifting here. I mean, these stocks were, dogs going into the reports. They're coming out of it a bit. Is this going to bounce right back and go up 4 points? Hell no. Too much, in my opinion, hell no. Too much overhead supply here. I think you get anywhere near 52. I think there's sellers. The airlines are they've been in the gutter for a long time. Those AAL numbers, American Airlines making new lows yesterday. You're getting a little relief pop in that. I think that pop is a sell. The weak get weaker, and the airlines are still in the weak camp. So I'm a seller of all rallies and all airlines.
To me, prove that you can get up and hold 51.
Really?
Yeah, you're talking 52. I'm seeing 51. I see a pair of highs at 50.70, and then I see another high just over at 51.18. So prove to me you can open up, get over 51, hold 51. I'm calling that resistance at 51 instead of 52. And Twitter, man, that thing is volatile, man. We're trading up $1.10. Give me the Twitter.
Twitter is the news of Twitter this morning is that Goldman Sachs is happy. They feel that Twitter's recent efforts to clean up the platform and purge it of fake accounts is going to be good in the long run. So Goldman is bullish Twitter based on their user cleanup.
GS defending it this morning. That's why it's up $1. I mean, this stock turned on a dime yesterday, was getting whacked with the overall market yesterday on the Nomura reduced rating there. So that's basically a sell Nomura had put on it. They bought it. They came in. They started buying it. It got to flat, and it's just held that. Now we're rallying right back up. So the strong get stronger too. I mean, you can argue valuation on a lot of different stocks. I've argued valuation on this before. It's the reason it's not in my investment portfolio. But as trades, you can put on anything. And I tell you, as a trade, stocks like this are just hot.
All right, couple numbers here I'll give you. What on the upside? You haven't hit your 2-day high yet, about 45.25. I'll keep an eye on that. You have not hit that in the pre-market. Double top up at just under 47 at 46.80. And then you got the daily here, Spencer, because this is one of my all-time favorite formations here. And I am, full disclosure, still on Twitter. But, man,
what is it?
This takes out 42. Dennis, Katie, bar the door. If this is
a 45.
I know. It was at 42 yesterday. I know it's a ways away, but that's where I might let.
I'll make the bullish bet on this. I'll talk against or you're talking against your own book. I'll talk with your book. I think this thing is going to see $48 again. It's right in the middle. It got down. It got a rating change to reduce a sell rating, and now it's shrugged that off yesterday. Goldman comes and defends it today. This could be up another $1. This is a stock just keeps going. Now, the way it's set up this trade is you lean on that 42, like Joel said. He's giving you a good number. Lean on the 42. If you're buying this for a long, if it trades below 42, you're right. I don't want any part of it. But give yourself 3 points. Give it up to 50. I mean, there's you're almost 2-to-1 risk reward ratio. Maybe you can pick it up at 44.5 or something today, and you got your 2-to-1 risk reward. So I'd give it down to 42. Below 42, I want no part of it, and play the bull side of it, because you know what? We're making new highs on this market, which I think we're going to do here eventually. I bet you Twitter does too.
Yes, you are so.
I think Twitter's going to see $50.
Can we just end this show?
I was bullish yesterday too. It didn't work yesterday, but it sure worked today. So it took a day.
Good. Yeah, no, good call there. Market hung in there yesterday. I just want to alert our traders a high on Tuesday was 97.75. That's my target on the upside. Tuesday's close was 96.50. So another 6-7 points. You may find some sellers. Coming back on the downside, you've had a nice range from yesterday. So you're not going to find mid-range on the session until you get to like 82.50, and that doesn't look like it's on the horizon. So, Spencer, we kept you 2 minutes late. I hope you're not going to, make us pay you overtime.
No. This is one of those shows where I'm just like tired of laughing. I feel like I was laughing the last 10 minutes. So let's just all get out and get on with our day. But if you want to
exhausted already, and my day just started.
Yeah, if you want to catch any part of our show again, or our prior shows, you can rewatch the show on YouTube or catch our podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play. Thanks to our guest today, Marc Chaikin. Thanks to all of you in our chat rooms. Hope you have a good rest of your day, and I hope you join us again on Friday. Have a good one.